Ladies and gentlemen of the crypto space, we're live on a Friday, May 6th at 11:40 a.m. I got a bad neck. I'm going to try my best, but I got a story based on what I just did. I ran out of the house. I went to a retail store. I broke out my flip phone, this little Samsung Jobby, the little Samsung Fold. I double tap the screen and boop, and I pay. And this tap to pay in the States is still something that the vast majority is foreign to them. And the psychology that I experienced was that the person receiving the payment was like, "Holy shit, what the hell is going on? This guy's paying with his cell phone." So I guess this plays into some of the people's statements that we're early and stuff. And I generally don't like that statement because that implies that there isn't an insanely volatile market and we're early, like buy anything because we're early. And I don't like that kind of statement. But it does indicate where we are with regard to the general public's understanding of what the hell is going on and what is technologically possible. The fact that you could pay with a cell phone pretty much anywhere in a modern retail store. There's plenty of retail stores that don't support tap to pay, but that's one good outcome of 2020 and the COVID situation is that pretty much every credit card terminal has been updated and almost everywhere tap to pay is supported. And the beauty of it is with Samsung devices, even if tap to pay isn't supported, these little devices, pretty much all Samsung devices, you can put up to a regular credit card reader, and it works in most places. So pretty much like 95% of retail stores, I could pay with the cell phone, whether it's a new to NFC terminal or a terminal that has a traditional credit card reader. This thing basically works everywhere. So it's mind blowing to a lot of people, whether it's a kid at a Walmart or, in fact, Walmart. Some of these Walmarts around here have the shittiest credit card readers, and I literally have to break out a credit card. I don't really shop at Walmart that often. I like Publix down here in Florida. Um, Aside from Whole Foods, that's the holy grail of supermarkets, but it's also something that sucks money right out of your wallet. Crazy numbers. Anyway, besides the point. Point being that almost everyone that I use tap to pay with, unless they're literally in their 20s, are like, "What the heck is going on?" And what brings up this story really is the evolution of my capital management and how I think about money and everything that we talk about. And really, most recently, me consuming a BitPay debit card and really settling on it as a great means of consuming uh, digital assets, as we're spending digital assets in a retail setting. So, you could say you're early. I don't like that phrase, but can you imagine if folks are absolutely jaw dropped just with tap to pay? I could never explain how I'm making that payment. I didn't go to work. I didn't use money from a job where I actually went 9 to 5 and waited till Friday to get a paycheck deposited to a bank account. This isn't a payment to a credit card. This isn't a payment coming out of a bank account. I literally did my DeFi thing. I took USDC, I sent it to BitPay, I reloaded the card using USDC, which is dollar denominated stable coins, and I have spendable capital on a debit card. And a debit card is loadable into this tap to pay system, be it Samsung Pay or Google Pay or Apple Pay. And you tap it, you not wireless, yeah, wirelessly. You tap it wirelessly to almost every credit card terminal right now. I paid with USDC to buy something. The, the general public has no knowledge of holy crap, what the hell is going on? So, in that regard, yeah, the statement "we're early" is applicable, but I hate that statement. I've said it like 3 times so far this stream. I guess maybe the sentiment really is empathy. Because literally, I'm paying with digital currency for a retail purchase to someone who's working in a store waiting for a paycheck at the end of the week to get a cash deposit into a bank account, expending physical labor, converting physical labor into income where I didn't do that. So I literally making a payment using all this technology, and I actually feel empathy. I don't, I guess there's a variety of ways to interpret my sentiment that I'm expressing. I would, at minimum, clearly it's empathetic. Maybe some people would think hearing me say these things, they'd call me a dick or something. Like, I don't know. I guess everything is subjective, and many people could take what I'm describing in different ways. But I'm glad and thankful and and profoundly grateful that this is what I was able to see and do for myself and my family. And the interesting thing is, I say all this story with the backdrop of a complete financial meltdown, and we'll look at some charts and stuff. I got Twitter up, but man, the stock market is disgusting. And another story, I was in the bank setting up a bank account for the trust, and I hear the investment advisor, and he's on call after call after call. And people are literally only calling for one thing: the stock market's crashing. What do I do? And he's like, "Oh, just there's not much to do. You could be balanced a little bit, take a little bit of risk off the table. And there's a recession coming, and we think there's a recession." Literally everything I hear out of his mouth, I'm like, I'm dying a little bit inside because he's not expressing the reality of what is occurring, nor the nuances to what's occurring. He's barely providing enough information for a person that's a human being that has worked probably their entire life to save the retirement account, and the market is about to get completely annihilated. And I'm just all these emotions and thoughts of the reality of the situation are getting processed, and that is just, it was a little overwhelming, but I kept a straight face and I was able to talk to the banker and get done with what I needed to get done with. But I constant sense of empathy for persons that literally have no comprehension of the financial system, have no idea what's going on with Federal Reserve monetary policy, what's going on with equity markets, and truly their entire life is based on equity markets and maybe a little bit of bonds, depending on what the investment advisor is allocating to. When they say risk off, it's probably to traditional bonds, but I mean, if they're going to buy bonds, bonds are at 3.087 10-year notes. This thing has crashed 40%. If you bought stocks, you've been obliterated. In 2022, if you bought bonds, you've been obliterated. You've lost almost half your damn portfolio. I can't fathom. At some point in my life, I did, I guess, 401ks when I was younger, and I didn't know what the hell they were, and investment advisors, and I can't fathom engaging with this notion of capital management if not being in control and not understanding the way the system works. I have an undying necessity to be in control. I guess I'm a control freak in that regard. In some regards of my life, I'm not. Like, my wife handles pretty much everything. I consider her an office manager, and she's employed. I literally tell everyone in the family, my wife's employed. She's got a full time job because that's how much work is involved. But for myself, my necessity is to understand this system and tend to ride like a surfer riding a wave. I'm riding the damn wave. I look at this chart. I'm like, all right, great. So bonds are literally collapsing. We're in historic territory. Stock market, this line is crazy. So I understand these waves. I see, as a surfer, I see this wave, and you see this white line. That we talk about technicals all the time, and this is a historic technical trend line. It's an imaginary line on a chart, but what it's indicative of is a psychological threshold. Because if I'm looking at this line, other people are looking at this line. So you have to think about how people interpret things and ideas spread and propagate. So this is meaningful. What it ultimately means, we'll only really know to the extent in hindsight, but it means something, and we'll see how it plays out. But this is some serious shit. I mean, for the last 2 weeks, month, the bond market has been collapsing along with the stock market. This doesn't happen. And this goes into like the investment advisor, what I heard at the bank. Like traditionally, the investment advisors do passive portfolios 60/40, 60% stocks for growth, 60%, 40% bonds for protection. Any portfolio that had 60/40 stocks bonds got absolutely nuked. Double, triple digit percentages. Annihilated. Crazy. So it's not a safe environment, and people are getting hurt bad financially. And to top it all off, you see what I post on Twitter with regard to the psychological analysis of the Fed's policy decisions. This is bonkers, and the system hasn't even capitulated yet. There's been no events. There's been no like COVID 2020, March 2020, or December, like the Powell pivot. This is when he pivoted, the taper tantrum, and then back in 16. I mean, literally, there's a goddamn financial crisis every 2 years. 2011, I don't know what was that, Europe or China or some shit, and then obviously the aftermath of 2008. This was wild. It was like a financial crisis every couple of years. So I love to understand the psychology of what the hell is going on, and I see it every day in my retail experience, and I look back to my understanding of the bond market, the equities markets, and I try and tell these stories. So I hope this was an interesting story. That was my observation. The general public would be like, what the fuck? Where did you get this money from? You did what? You clicked the button? They wouldn't believe it. Nobody would believe it that I clicked the button and I was able to buy things in the store. But, you know, what the reality is, it was work, because the amount of time and effort I put in to understand these markets and to tell stories like the story I'm telling you, there's no way that's not work. That's not the same work as traditional labor, as in I went out to a field and I pulled corn off a stalk. It isn't labor like that. We need labor like that. We need farmers. But what have we done in this country? We financialized the crap out of the country, where there's literally financial enterprise. And the vast majority of capital in the United States is derived from financial activity. So this is further financialization of the country, which will produce additional revenue streams for the federal government, additional tax receipts. And this is really the only way to grow by current standards. We don't have enterprise expansion, manufacturing based expansion. We don't have mining expansion in this country. So it's not like we're pulling additional resources out of the ground. So how do you continue to have the GDP go up? Further financialization. And this is perfectly consistent with that, and that's where my income comes from. The financialization of US enterprise. Anyway, so the equities market. Let's take a look at Curve, one of my favorites. I call it the source of truth in the crypto space. Now, I really like the way this looks, and if you look at the trends, look at where we were in our most previous, most meaningful market cycle. I would say something like this is what catches my eye as comparable. So there was our capitulation. This was a liquidity event. This was the Bitcoin liquidity event in summer of 21. But this is our capitulation, and then the failed bounce and a bearish market. So here's our downtrend. This is completely analogous. So we'll see how macro conditions align and how much pressure is to hold Curve under this trend. But it's kind of very obvious how it lines up. Interestingly, there's one bounce, two bounce, two bounce, three bounce, and a breakout. So three bounces here, a failed breakout because macro conditions absolutely suck. But it'd be nice to see it hover around with at least higher lows because there was higher lows for this time period as well. Bear in mind this low is at a buck, so I don't know. I don't look. It'll be really hard to get it back to a buck. And I was thinking for a while this would be a fat ABC correction, but it held at a buck 89 twice. It held at a buck 89, absolutely wild. And then the third dip is down to a buck 94. It's comparable to here, just at a higher price point. This is to a buck, but then the second dip was to a buck 20, and then to a buck 20 again. So again, these higher lows in this very bearish macro condition. I mean, this is quite fascinating to see. Those are higher lows. This substantiates that, holy crap, people are buying at a higher price point in extremely bearish macro conditions. This is a wonderful asset to see this play out. That's glorious. Now, do we see something lower? Do we see very bearish market conditions? Maybe it's a capitulation with a giant wick down, buck 30, and it wicks right back up the $2 region. That would be further confluence, further confirmation suggesting that these price levels are an extraordinary thing to see. There isn't what this thus far, just thus far, indicates there is an immense demand for this asset. The buying pressure is extraordinary, especially, I'm not even getting into monetary policy. The amount of this asset being bought is more than, well, it's not more that's being sold because that's the only way you get for depreciation. But the amount of buying and selling is skewed towards buying much more than last summer because that's the only way you get down to these price levels, more selling than buying. So there's more buying than selling as compared to this period of time last summer. So year over year, the buying is greater than the selling. It's very good to see. It's an extremely strong chart, in my opinion. And I mean, you could have like maybe classic technical persons come up with whatever the hell they want to come up with, but I see three very distinct historic periods that have an entire psychological conversation to be talked about what went on and why it went on. And that's the story that I tell. This is probably the most extraordinary asset in the entire crypto space. And folks will be like, oh, Uniswap. There's no comparison whatsoever to that protocol. Literally, I don't care if Uniswap's doing 1 billion plus a day in transactions. It means nothing. This is a monetary policy. Uniswap is a technology, and Curve is a technology also. So, what is the most innovative thing in the crypto space? Sure, the technology is extremely innovative, and that's meaningful. But the most exciting thing in the crypto space is the monetary policy innovation, because that's really the evolution of central banking, or at least the iteration of central banking. What they've done is they've taken the history of central banking and created technologies that encapsulate the concept of the money creation process and have presented it in a technologically consumable form. So there's no one that could come up with an argument, in my opinion, that would say that this is not one of the most extraordinary charts that I think I could point to at all of any market because of what it means. How many charts can talk about hyperinflationary monetary depreciation combined with some sort of acceptance or acclamation or assimilation of the technology where buyers exceeded sellers and we had a rational exuberance and an overall crypto market local liquidity event producing a higher low. And between here and there, a federation built, which is totally analogous to a federation of sovereign countries, just like the dollar and how other countries are mandated to put the asset on their balance sheet. And that's what this is. This is mandated protocols putting curve into reserves, and that's not even the MMT aspect of the currency. And then we have higher lows in extremely bearish market conditions. Anyway, that was a very quick, condensed version of the history, but it's an extraordinary one thus far. I'm digressing a lot into this. Let me answer some questions, and I got to keep it short. My neck's about to explode. Charlie's in the house. How are you, my friend? I hope everything's okay. Lewis, hey Noah, CVX Convex went to 60. I see that as a fluke. Do you think the token appreciation of any significance is in the cards for Convex? Yeah, let's talk about Convex. So here's the deal. I'll show you guys exactly the way I look at this stuff. Um, yeah, anything above trend is exuberant. So take a look at this on the weekly. I consider, if I could, what I would do is something like this. I'm just crossing, well, not below the TWAP. Everything above the TWAP is exuberance. So this is like people that look at the VWAP, but I look at the TWAP. It's comparable. So, I wish we could suppress. I wish we could suppress the price action and just look at the TWAP. Can we do that? Holy crap, we can do that. This is the chart. Let's take a. Can we hide more? Edit. Let's hide that. No, we want the TWAP. Let's get rid of shapes. Plot background. Very nice. I mean, this is kind of like a line chart, I guess, but I like this better. Well, let's take a look at the. We could take a look at the line chart for the fun of it. Line chart. Yeah, but it is, you still see the volatility. So let's go back to the candles and let's hide it, and we'll tell a quick story here. Hide. So here's your chart. That's the chart, my friend Lewis, Mr. Honorable Lewis Berry. This is the chart. People looking at price action, that doesn't mean shit. This is how you peer through the madness. Now, some nice green indicators that express strength. So we're in bearish market conditions, but this is a relatively newer asset, so we don't have the presentation of higher lows. So we could go over to the daily and see if we have increased granularity. Look at this chart. This is a variant. Maybe I should start looking at all charts in these terms. Um, let's turn off the guppies. Let's turn off the moving averages. This is the TWAP, and we're breaching. Maybe you could call this an inverse head and shoulders, but it broke down, it broke up. So I would like to see it hold above 16 bucks. If we're looking at literally the TWAP in classical technical terms from a levels perspective. RSI looks to be showing support at a higher low, which is nice to see, which is actually at a range, an RSI reading of near where it first capitulated down to the bottom, down to, what was that, $2. Extraordinary. But look, RSI collapsed down here to $2, and now RSI is collapsing to that region, and we're $24. Come on, this is strength across the board. RSI could collapse to very low numbers, and it'll be very hard to get it down to 17. So this is a very interesting region right here, rectangle between here and here. Like to see it hold this region. And now you have to talk about the psychology of why this asset would stay in this region. The psychology has shifted a little bit towards curve for voting control and people paying for curve votes. So that would indicate there's a little bit less buying pressure for CVX, but CVX still controls significantly more curve. So per CVX, you have more voting weight. So it's a transitory experience, a cyclical process, bribing curve, bribing CVX. So I expect the buy pressure to decrease for a transitory period of time. but eventually it'll shift back towards CVX. So you'll still have the buy pressure because of people that have forethought, protocols that have forethought, knowing exactly what I'm talking about. That it will shift towards curve for a period of time, and it'll eventually will shift towards back towards CVX. So the protocols that are mandated to have curve voting power will be buying CVX all the way down. So there will be buy pressure, probably decreased buy pressure as compared to curve for the reasons I'm talking about. So I would expect depreciation. How much? You buy on the way down. That's what you do. And we needed to carve out some cash to buy on the way down. So can we see capitulation? Sure. How far? I don't know. We only know in hindsight. But look at the strength. Curve has been much stronger. That's obviously the price action chart, but let's put price action. Curve has been much stronger than Convex, in my opinion. Significantly higher low with multiple pushes down. And this is, well, you got a little bit of an inverse head and shoulders actually right here. Where's my brush? That's actually pretty good to see. Boop. Oh God, I'm horrible at drawing. Boop, boop. That's cool. Let's see what happens. Uh, I wouldn't be buying anything right about now. I'm very tempted, but my brain is trying to have as much self control as possible, knowing what I see is going on in the bond market and equities. I smell regime change all over the place, but it's not necessarily the case. For the OTC derivatives market, as I describe it, if bonds collapse in price excessively, you get exactly what happens throughout history. You get the historic, violent directionality shift where collateral needs to be bought under all circumstances to prevent position liquidation in the $750 trillion derivatives market. So I sense great volatility inbound. The geopolitics of the situation it complexifies it even more. So what I know is I need to be protective and have ample savings. So we started this entire story with me making a retail payment with a cryptocurrency using tap to pay technology. You better make sure you got some cash in the bank so you could go to the store and buy your shit, buy your dinner. And I expect those prices to go up for a fair bit of time. Let me answer some more questions. I'm going to wrap it up. Lewis, my friend, as your attorney, dentist, and masseuse, I recommend you see a chiropractor for your neck and get a massage. Thank you, my friend. Yeah, it's pretty bad right now. Osarko in Europe to tap to pay, known as contactless, is very old. It's everywhere. Yeah, can you imagine? And if it's old in Europe, in Japan, where they're they're the kings of technology, they're probably using like handprints to make payments at this point. That has a bit of a privacy complexity, but still, the point is not a stupid piece of plastic. That's like 1980s right there. Yeah, we live under a rock in the United States. The people here are backwards in many regards. China, this has been the norm for 7 to 10 years. God bless you, my friend. And I'm happy you know that because you know who doesn't know that? The general public in the United States doesn't know that. The general public in the United States still writes paper checks. Okay? It's a stark reality. So there's a little, and this obviously presents exactly the opportunity that I take advantage of. There's so much of it, so much available in the U.S. because the vast majority of people in the U.S. really live in the 1980s with paper checks and cash deposits in the bank accounts, and it's really wild. It's surreal. It's very backwards. In 10 years, we'll have wallet addresses to scan with the cell phones and cash registers. Well, look at Strike. Strike, I'm very excited about Strike. If when Strike is accepted at terminals, just as Jack Mahler says, you could, you reload your account, you throw Bitcoin in there. If you have some cash profits, you convert it to Bitcoin, put it in Strike, and you make your payments. The denomination in your payment account you keep to a very reasonable level to account for volatility. Bitcoin's volatile, but that's works and that technology works. I very much look forward to that. And I actually, thinking about it at the moment, I might actually opt for that over the BitPay card. Public sucks money out of your pocket too. Aldi's is where it's at. Yeah, Sedano's too. Sedano's. Woo. Shish, I loathe buying food from anywhere but Aldi for the sake of my monthly budget. Yes, indeed. My 401k is a hedge against my own judgment. Yeah, it can be. It can be. It's very. I just don't. I don't like other people making decisions, and that's what the 401k is. We are in the times of lazy retail investors due to how few button clicks it takes to take action. Easy pickings for the pros. Yes, indeed, my friend. Sir Joe's in the house. Kill us. Always a pleasure. New York State of Mind. Thanks for everything, man. Learned a lot from you and recently started watching Real Vision. Real Vision changed everything for me. God bless. Dennis, is there a point for someone to participate in the Curve Ethereum L1 ecosystem with only a 10K portfolio? The fees are a decent sized percentage of the portfolio. Well, I've been giving a lot of thought to like financial advice and trying to help people. Like I borderline provide financial advice. Mostly, I consider myself a storyteller. But 10K portfolio entails you to assess what you want to do. You want to probably grow your wealth. And you want to have more than 10K. And this is not the time to grow wealth. This is not the time to turn 10K into anything. The odds are throwing around 10K in a market like this, you're going to lose money. This is not the time to try and build a cash income business. This is the time with a 10K portfolio to wait and hope for an opportunity. So, what does that mean? What would I do with my knowledge now with a 10K portfolio? I'd sit back and wait and hope that the system completely annihilates itself. I'd wait for the collapse of Bitcoin in March of 2020, the wick down to $3,500. That's what you want to wait for and hope because it might not come. A lot of people would say the odds are it will come. But you need that deal. You need that Warren Buffett moment where a company is on the verge of bankruptcy and with regard to the price point of a crypto asset, it getting completely annihilated. If you see that moment, Bitcoin at 20 grand, probably be that moment or less. You buy things, but you got to wait for the collapse. That's how you turn 10K into 100, into 200, into 500, into a million. You catch the bottom. And then that's the 2020 playbook. What would I do? I probably wouldn't buy Bitcoin. You probably get multiples on Bitcoin. I mean, Bitcoin ripped what 20x on the money. So 20x on the money on 10 grand would be 2 mil. No, I mean, sorry, it'd be 200 grand. So I probably wouldn't do Bitcoin with 10 grand. Like nowadays, I'd probably be looking for multiples a little bit larger, and that's what happened in DeFi. DeFi summer, you got 100x's all over the place, and that 10 grand, would I speak from experience. My entire portfolio was, I think, 100 grand back in March of 2020, and so you can rip those multiples, and it's going to be a heck of a learning experience. You're going to have a lot of emotions, anxiety, trials, and tribulations. But my recommendation may be a financial recommendation. So you don't need to go out on the risk curve. And you probably don't even need to go on to the alt chains. Once the market capitulates, if it capitulates and things crash, you can probably throw that capital around on Ethereum mainnet and do very well. I mean, think about it like this: if Curve collapses, you have a massive wick down to $1.25. Dare we say a buck, and you buy your Curve and Curve 5, 10 years out, it could be significant appreciation. $50. $50 a Curve would be wild in 5 years. It's pure speculation. You have no way to know what it's going to be. But that'd be 50x on the money, a half a mil. Half a mil pulling in 10%, you're pulling in 50 grand a year, doing nothing. So and 10% is obviously much lower than it is now. It's about 40%. So a half a mil pulling in 40%, you're pulling in 200 grand a year. So these are the calculations and the conversations to have with yourself to understand how to potentially allocate capital. Is that enough? Are you interested in more? Then you got to go further out on the risk curve and head into protocols that are not maybe new. What I have learned in this, as I am right now, as I watch the markets collapse, I watch the bond market collapse, I am not looking to make as much money as possible. Now, I know you guys know I've said this a lot. I am not looking to, I don't care about my all time high. I, I know people with 5, 10 times as much capital as myself, and I'm not looking to have more money than them. I'm looking to have mental sanity and clarity and how I could sustainably engage with the markets. So that's food for thought. I know you want to turn 10 grand into a couple of mil, but maybe you don't because that takes a lot of emotion. That's a big emotional toll in order to do that. And it's not guaranteed. There's no guarantee. Um, Hope that helps. It's an ongoing conversation, Dennis, and there's no rule book, there's no playbook in what to do. But really, the best advice I could give is to ask questions and don't stop. Continue to have the conversation about choices, decisions, psychology, and rationality. Happy Friday. Looking forward to the multiverse of man. Oh my God, I can't wait. I'm trying. I'm trying. I got 2 kids and a wife, and I got to figure out how to get to the movies this weekend. My wife said it's going to have to wait till next weekend. And she's looking at me smiling right now. And I'm like, no, I can't wait until next weekend. I got to go to the movies. So I'm going to figure this out. I'm going to figure it out. Warren Buffett just recently came out and said he's on a buying spree. Yeah. If I had $175 billion, I should be buying, a couple $1,000,000 worth of stuff here and there. Warren Buffett on a buying spree, of course he is. Discounts and discounts, discounts. So that's the logic and rationale. It's a little bit different for a person with capital that size. Actually, it's very different with a person with capital that size. But that's the mentality to try and really digest why he does what he does when he does it, in my opinion. Winner in Training says 13 likes, 34 people in the stream, 16 likes. We can do better. Thank you, my friend. Last questions. Noah, much love from South Africa, brother. It's a pleasure and an honor. It truly is. Trevor's in the house. Definitely see it in 3D IMAX. Thoyo knows the deal. Thank you, my friend. Friday, May 6, 12:17 p.m. As always, thank you all for joining. Tell everyone to subscribe. After party on Discord for the most rational community in the entire crypto space. Love all you guys. If anyone needs me, noahseidman.com 101. More than happy to help the best I can. I wish you a wonderful weekend. Try and stay sane. Try and avoid the anxiety. Stay rational. And look forward to more commentary and talk over the weekend. I will see you guys on Monday.